Stokel-Walker, a technology journalist and author. Welcome back to the program. Now, SpaceX is eyeing a $1.5 trillion valuation. Is that number grounded in business reality, or is it just Elon Musk's hype?
Well, I think it's probably a little bit of both. So obviously we have to bear in mind that SpaceX is a pretty unique company. This is a private firm that is able to supply the spaceships and the rockets that get things into space for companies like NASA, for the ESA, for many other space organizations. And so therefore it is a vitally important part of not just the private sector, but also increasingly our public infrastructure, including that idea of the burgeoning era of aerospace. But alongside that, of course, we also have a little adjunct in addition to SpaceX's core business, which is Starlink satellite internet. And again, we're seeing that becoming increasingly important because actually we need this connectivity in all parts of the world, and sometimes those broadband connections can be unreliable. So certainly I think that this is a unique proposition for people to potentially buy into this year. If we kind of benchmark, I suppose, the scale and the size of that company, 1.5 trillion, we think there may be, that puts it maybe in the top 6 or 7 most valuable companies in the world. Obviously, we had Nvidia in 2025 topping $5 trillion for a short space of time. We then have companies like Apple and Meta, which is around about 1.5 trillion. So just around about where we would see SpaceX. For a non-tech example of how valuable this company is, well, we can look at, for instance, Saudi Aramco. You were talking earlier in the program about oil reserves, one of the world's richest oil companies, and basically that would be the size of a SpaceX. So I think that this valuation is potentially interesting, potentially worth it, but it does, I think, depend on those two aspects. The idea that we continue to go to space in the years and decades to come, and most importantly, I think, that idea that Starlink satellite internet is going to become the norm, where we don't necessarily know that is going to be the case, because there is a lot of competition from, for instance, Jeff Bezos's companies and Amazon Kuiper satellites and lots of other things.
These are massive numbers that we're hearing. Does the market actually have the cash on the sidelines to absorb trillion-dollar listings right now?
Yeah, well, I'm not an economist, but the people who are economists say that actually liquidity is tightening. This is becoming quite difficult. Investors, I think, are becoming a little bit cautious. And of course, we have looming in the background, as we have always had throughout 2025, the idea that this thing may be a large, big tech bubble fueled largely by the AI revolution. So I think that there are some suspicions that actually this might be quite difficult. We do know that global equity markets can absorb those sorts of pretty large deals, but they can't do many at once. And you've been talking about some of those big valuations that are coming down the line. We can't just look at SpaceX in isolation, for instance. We have to look at, as you mentioned, OpenAI, Anthropic. All of these companies are perhaps looking for some sort of exit for their starting investors into the publicly traded stock markets. And so that does become exceedingly difficult, because basically the sort of pool, I suppose, of fresh capital is becoming a little bit thinner. You start to see these big beasts dominating the investment markets, and then that becomes very, very challenging for those beneath them.
Yes, and with these AI companies chasing huge price tags, could this be the peak of AI?
Yeah, it's a really big question, to be honest. I mean, I think that this probably still has some way to go. We spent most of the last 12 months expecting at some point this AI bubble to burst, and actually turned out that it never really did. We have continued to, some would say, run into 2026 in a very strong way. Others might say that we're lurching or staggering into 2026 with the AI bubble still inflating, but looking like it may go pop anytime soon. I think there is still some way to run, not least because this is still relatively early days. Of course, when we're talking about the user base of these AI companies, OpenAI, 800 million users accessing this every single week. That is 1/10 of the world's population, yet they have pretty much 90% of the world's population still to go if they want to. So the idea that this, I think, has run its course is not quite there yet. And maybe some of those predictions were a little bit premature, just because this is still just such an early time for this technology. If you think about, for instance, the smartphone revolution kick-started by the release of the iPhone in 2007, we are now, what, 18 years into this, and we're still seeing new innovations. AI is potentially an even more transformational technology than that. And so actually, I think that there is a potential here for this to continue to run and perhaps not actually get to that bubble bursting point quite yet.
And a single one of these listings is bigger than the entire IPO market of last year. Will that suck all the liquidity out of the room for smaller companies?
Yeah, I think this is one of the things that is really vexing startups and scale-ups at this time right now, because they're thinking, well, it's all well and good that these big names, and you ran through an awful lot of them at the start of this discussion, are coming into the market, and it's good for everybody because there is this trickle down element. Rising tide floats all boats, but perhaps they're going, well, if an investor had the option of buying into an OpenAI or an Anthropic or SpaceX, or they had the opportunity to get in on the ground floor of my small company, well, the reality is they're probably going to choose the bigger firm because they've got the proven results already in less than 3 years of this technology. So I think the real fear here is that you have investors starting to look at these things and going, there is a real risk here of this becoming a problem, and going, well, actually, yeah, I will go for what is seen as the comparatively safer bet. And then you look, of course, at all of this stuff worldwide and you think, well, actually, there are bigger geopolitical issues as well. So perhaps that might be a challenge for the smaller firms.
Chris Stokel-Walker, tech journalist and author, thank you very much for your analysis.